But let's take stock of what the market is up to right now. Amit Nigam, head equity at Peerless Mutual Fund, joins us in the show right now. Amit, hi, good afternoon. Can't help but begin our discussion with IT. Now that TCS Infi earnings are done with, what's the pecking order now really in the IT space? And of course, now with Chandra getting elevated, ousted from TCS, new management at the helm, how would you stack up Infi versus TCS now?
Hi, good afternoon. IT services space is something that we at Peerless have not been very excited for quite some time, for the simple reason that if I look top down, then these companies or this sector has not been growing at the same pace as it used to 10 years ago or 15 years ago. If I look at their return ratios, then obviously they have come down again over the years, simply because now that they are sitting much more on cash than they would sit earlier. Now, given these headwinds, we were running a huge underweight on that sector. What we have been more positive on has been the IT product space, because that is where we find a lot of growth opportunities going ahead. It's a very niche space, and also given the fact that along with the IT services companies, the valuations there have also tempered, we think that that is a better space to be invested in.
Right. Aside of that then, Amit, what is it that you're expecting from the rest of the market? And does it seem like we could very well be sitting at the top end of the range, considering you've got earnings playing out thick and fast? Then, of course, before you know it, it's the budget and the Uttar Pradesh elections as well. Does it seem like we could be headed in for another month or two of just extremely ranged markets?
Sure. So, if we see at the market headline numbers, I mean just the Nifty levels, then considering today's move, we are back to the pre-demonetization level. So on 9th November, we were somewhere around these levels only. But if you were to look at the internals, then we see a lot of rotation which would have happened amongst the companies. So the companies which were more consumer facing are the ones which are still languishing, whereas the ones which are one level or two levels separated from the consumers, which typically are B2B companies, are the ones which have done better. The companies which are more cyclical are global commodity linked, global commodity prices linked, they have done better. So so if you were to ask me, the markets are back, but the way we look at these companies is that the businesses, especially at the retail level, at the domestic level, are yet to recover. Now we are going through a result season where I am sure there is a lot of uncertainty, because no one is able to put a hand on how this demonetization would actually impact the numbers. We ourselves have met numerous dealers across industries to try and get the pulse of on the ground reality, and what we have come back is that there are two things which have actually played out. One, that most of the corporates which in their history would not have supported their dealers have actually extended credit. B, we are seeing a lot of pressure on the informal part of the economy. And when I'm looking at the informal part, I'm looking both at the companies which are producing products and also companies, for example, which are into the financing. So there was a lot of informal lending also happening in the economy, which was actually lubricating the informal sector. Now both of these sectors, or both of these sections, have come under tremendous pressure, which gives me a lot of opportunity.
So, Amit, if I could come in there, the point that you're raising. So if I could come in there, the point that you're raising about the impact that has been there on, for example, the informal lending, the NBFCs, the consumption-led stocks, etc. You have seen a price correction. So would you say it's a great time to buy?
Yes, I would agree with that. So that's what I was saying, that the markets may have come back to the same levels, but these are the companies which have still not recovered. In fact, the sectors, especially where we find the presence of unorganized far higher. So if I can look at, let's say, the jewelry sector, if I can look at the footwear industry, if I can look at paints, where the informal or the unorganized category is still much larger than the organized or the listed players. Those are some of the areas where we think that there's a lot of opportunity, and given the fact that the valuations have sobered down much more than what we think that the impact would actually be over longer term. So maybe in the short term, the stock market might be pricing them pretty well, expecting that this quarter earnings or maybe even the March quarter earnings to be negatively impacted. But if I were to look at or take a slightly longer view of these businesses, I think these are good times to invest in companies selectively, of course.
Right. Thanks a lot, Amit, for joining us with your outlook for the markets and the triggers that are available for us to invest in.
Much.
And like he's pointing out, nobody knows the impact of demonetization. And Aisha, I'm sure everyone is now even more confused after seeing yesterday's IIP data for the month of November. The IIP data coming out saying there's been a growth of 5%. We're still trying to figure out the impact of demonetization. But here's Gautam Chichori of UBS.